look at a chart. Well, let's put the caveats first. If you can't hear me, let me know. If you want me to look at the chart, let me know. Beautiful. Welcome to today's stream. TradingView now has stream splitting, which is nice. It means I can live stream on 2 separate platforms at the same time. While people start filing in, I'm going to go get a glass of water. I'm going to be right back, everybody. Just sit tight. Alrighty, everything should be working today. Link in Discord is wrong. Well, let's just copy and paste it again, shall we? Oh, you're right. Yeah, looks good to me. Sounds working. Yeah, everybody's happy. Let's get to it. All right, let's start with Bitcoin. So what we care about here on the 4-hour chart is the 900 period, or 832, if I remember Kat giving it to me correctly. Okay, nice. So we're in this compressionary condition now, right? We had our initial drop, saw a rebound really quickly. We initially reject. We played with it a little bit, but as soon as we broke inside, significant candle close, we entered a bullish mean reversion condition, which is where I entered my long. Pretty much we are just going to compress laterally until 900 period goes below, 832 period goes below the 0.7 value on the wave PM. So we'll type that in, 832. Okay, so we care about this one purple line here. Essentially what we're doing is we're waiting. Oh, is it actually higher? Yeah, I want to actually manually find this out. Let's try 915. 1,000. Why is it not changing? There it goes. Okay. Anyway, we're in this compressionary condition. We're essentially just waiting for. Let's do the daily. You know what? Sorry, I'm playing with look back periods that I shouldn't be touching. So let's just get the 3 wave PM reading. Okay, it's 140. Let's set it up. Sorry, guys. 140. I was multiplying it in my head, but it doesn't matter. Mo House, hello, my boy. If you want me to look at a chart, just tell me what chart you want me to look at. So this was our mean reversion condition. When we entered it, it implied we would be in this compressionary condition, which is just the purple band. So we're in the purple band. We're probably going to stay in the purple band. You are great. God bless you. You're my guy, my dude. You're my guy. So essentially right now support is 6,300. All right. I don't expect us to go any farther than that. If we do hit it, we should just bounce off the value. If we spike up, our resistance is 9,500, but I seriously don't see us hitting that. So let's take our time. Moha says, I'm a newbie. If you want to check out the basics of my strategy, just click the link below this video. It's a short write-up explaining what everything is here. All right. What do you guys want me to look at? Yeah, let's get into the main topic for today. Okay. Hippity hoppity. The Fed now buys commodities. Oh, the Fed is. Oh, man. What did we get? They are being very liberal with their new powers here. The Federal Reserve just pledged asset purchases with no limit to support the markets. The government is buying assets to artificially prop up the economy. Federal Reserve said Monday it will launch a barrage of programs aimed at helping market functions more efficiently amid the coronavirus crisis. Goodness. Among the initiatives is the commitment to continue its asset purchasing program in the amounts needed to support the smooth market functioning and effective transmission of monetary policy to broaden financial conditions to the economy. All right. So when you're in a recession, any kind of spending you do has significantly diminished returns, and it has increasingly been that way over the last year. The more money the Fed has spent over the last year, the less of an effect it has had on the economy. Now that we're actually in a state of a crash, I have very dubious expectations for the Fed and their intentions, right? If the Fed is using this as an opportunity to buy up assets, wouldn't that make a lot more sense than them trying to pump up an economy that fundamentally cannot be changed by any amount of spending? Like the debt imbalances right now across the board are $60 trillion. Right now we have a $6 trillion stimulus plan. All right, guys, it's a tenth of the amount lost thus far in a month and a half. $6 trillion isn't going to do anything. The 60 trillion is asset debt, excuse me. So the Fed buying assets won't help the economy. They're just accumulating assets, which leaves me questioning their intentions. Okay, the Fed will also be moving for the first time into corporate bonds, purchasing the investment-grade securities in primary and secondary markets and through exchange-traded funds. This is historical, and this is a huge overstep in government power, but nobody's really reporting it. And it really upsets me. Everybody just cares about the newest cases and the grandmas who haven't gotten their ventilators yet. I know that was slightly insensitive. I apologize. But my point is, we are seeing some of the greatest loss of liberties and the greatest overstepping of government power in God knows how long. And it's completely overshadowed. Like, I have no doubt that the coronavirus is going to be used to take away civil liberties. It's an opportunity. I'll tell you that much. No, I'm not going to say it's a conspiracy theory. No, I'm not going to say vaccines cause autism. I'm saying that this is a wonderful financial opportunity for the government to have greater control of the market. And for the first time ever, they're saying, yes, we are allowed to do this. We are going to buy parts of companies. We're going to buy assets. We're going to buy commodities to quote unquote support the market, which they fundamentally cannot do because they just literally do not have enough money to change anything that's happening here. Oh, look, the Fed also said it will be purchasing agency commercial mortgage-backed securities, bonds, commodities. Good, they just want everything. We are now in QE infinity again. It's unlimited, guys. They didn't put a budget on this. They're going to buy as much as they want with money that they just create out of thin air. Guys. And then, oh, yeah, this is aggressive intervention. Additional measures include the insurance of asset-backed securities backed by student loans, auto loans, credit loans. Yeah, that's all fine. The coronavirus pandemic is causing tremendous hardship across the United States, and the Fed is here to help. Our nation's first priority is to care for those afflicted and to limit the further spread of the virus. Oh, yeah. So you guys, it's all for the good of the nation. While great uncertainty remains, it has become clear that our economy will face severe disruptions. Aggressive efforts must be taken across aggressive efforts must be taken across the public and private sectors to limit losses to jobs and incomes to promote a swift recovery once the disruptions abate. Ooh. No. It doesn't work like that. Just the size of the debt or the size of the lost value right now is just insurmountable. And the required amount they would need to print to restore it is such a large percentage of the GDP that it's absolutely bonkers for them to even attempt it, which leaves the only reason they're doing this is for their own gain, for their own. Yeah, that's it. Central Bank also said it will lowest interest rates from its repo operations to 0% from 0.1%. Ah, good. So nobody needs to pay any money, guys. Guys, just gonna print. Money printer goes brr. How to protect your nest egg in volatile times. You do nothing. If it's your nest egg, you just don't touch it. You leave it alone. 5 years and now it's going to be worth the same thing. That's what a lot of people need to understand. All right. Can you tell us your opinions on the Federal Reserve plan for the USA and its consequences? Do you think the Fed could do enough to avoid a recession, further crash? There is absolutely nothing they can do to prevent that. Let's go to Reddit. All right. My profile posts. Gonna take a little look into history here. This is my bearish doom and gloom period 9 months ago. I liked this. I got this business card from my Grubhub delivery driver. There's a lot of bearish macroeconomic indications we have going on, but damn, it's something else to see these bearish signals in person. $1,000 offer. I'm an engineer without an engineering job. I've been looking for over a year with no luck, so here's my offer. If you help me get a job, I'll give you $1,000. It's hilarious. It's kind of sad. Yeah, stocks have never been this expensive for how low interest rates are. From all available data since 1881, certainly doesn't paint a bullish picture. Beautiful. There's this one, 5-year versus 3-month bond yield spread has now been inverted for over 100 days. That has correctly predicted a recession within 180 days, or excuse me, 18 months. 7 times since it was first conceived, and it hasn't been wrong since. Another thing is this beautiful chart. It's the UBS Real Estate Bubble Index. Very good at predicting financial recessions. Hong Kong, UK, Canada, and Australia were all overvalued housing markets. We are seeing mean reversions unfold there. And what I was looking for this was this. Any additional macro level bearish signals on the economy I can add to my list. So do you think the Fed could do enough to avoid a recession, further crash? No. No, since 9 months ago, we've had really bad fundamentals, and they've only gotten worse since then. And now with record high unemployment, there's absolutely nothing the Fed can do at this current time to save the economy. If the Fed does anything, it's going to be out of their own self-interest. Alex Ramashkov, says, thanks for streaming on 2 platforms, by the way. I've been enjoying your videos. It's been my pleasure, my dude. I'm happy to accommodate as many people as I can here. And the ultra-wide monitor actually lets me have this nice little area over here without messing too much of the screen layout. Good stuff. All right, so that was my rant. That's all I got for you. I'm gonna get my guitar. I'm gonna tune it, and I'm gonna play guitar until people give me more questions. So I'll be right back. I had a really good idea. I'm gonna write a metal song, like a death metal song, like gent. I'm getting an 8-string guitar specifically for playing gent, and it's gonna be called "Money Printer Goes Brrrr." It's gonna be great. But I'm gonna write that song. Yeah, Money Printer goes brr. It's gonna be about the Fed and their irresponsible spending. I'll upload it to my YouTube channel eventually. What are you looking for? Your guitar rig. Come here. Guitar rig. How do you think this will affect Europe in general and Germany specifically? Ooh. I don't know much about. I'll just say it now. Ramshkov, can you elaborate on that just a tiny bit? But specifically Germany, I don't know any of the fundamentals for the current scenario in Germany. I know it's global bearishly, largely because of the $82 trillion of debt China has. Beautiful. Blue 74. Let's go. They got hit pretty hard since malls have all been shut down. I actually don't know what that is. It's like, I'm not afraid to admit it. I don't know what that abbreviation is. Let's check it out. Is it a ticker? Sorry. REIT. A real estate investment trust. Oh, I don't know much about this asset class. I'm sorry. Huh. Okay. Real estate investment trust is an investment vehicle for real estate comparable to a mutual fund, allowing small and large investors to gain access to real estate investments. Okay. That makes sense. Nice. Well, we have pretty good information here. And it has to do with this chart. I know this is really small, so I'll link it. I'll drop it in both chats. Hey, stop that. So I think the housing market is going to devalue significantly over the next 3 years. It's the UBS Real Estate Bubble Index. Hold on. I'm going to pull it up on my phone and link it to myself because, 1 second. Yeah, generally, if you have a severely overvalued housing market, I'm going to assume that an asset class that's a vehicle for real estate won't perform all that well. Now, I don't know much about the specifics of the asset class, but I do know the housing market is overvalued. If the housing market's overvalued, I cannot imagine that an asset class that performance is derived based on the pricing of real estate is going to do well at all. So that's going to be my take on it. Let's check this out. UBS real estate. Nice. I'll link this to myself. Peace. Check it out. Because I never delete my browsing history. That's why I link things from my phone. All right. I'm a U.S. person. I didn't read the disclaimer. What have I done? Did I link the right thing? As value buys. Okay, no. If they've decreased in value for now, they are just beginning. Come on, I didn't link the right thing. God damn it. Let's take a look. Oh, I have to type in bubble. Hold on. Bubble index. There we go. Nice. I think this is it. Try this again. Paste. Take a look. Where are the greatest bubble risks in 2019? Okay, if it's green, I'm going to assume it's safe, fair value. Undervalued is really nice. If it's overvalued, I'd stay away. So it depends, where you're buying. Good day, gentlemen. Mr. Wizard 9000. How do you do, good sir? My phone's buzzing. Happy birthday from your dentist. Why am I getting so many messages from dentists today? It's not my birthday. Hello, Michelle. It's not my name. Stop. Okay. Yeah, not value buys yet. Everything's still overvalued. Definitely wait, my dude. Oh yeah, I gotta link this for you. There you go. There you go. Wait 3 years. If you want to do a value buy, just wait. I'll give you some perspective. Just use a major index. BGI. Go to the monthly. Okay, so get this clean, baby. I'm just gonna turn the logarithmic off. All right. So, what do we care about? I'll show you. Okay, 2008. The entirety of the 2008 move to the downside lasted 518 days for a total of a 54% downside, roughly 55%. So I'm going to use the thing that makes it stick. Okay, just wait. Date and time. Hold on. Stop it. Green is square. All right. 55% over 518 days. So right now, we saw about 2/3 of that entire move in 1 month. Is arguing with someone on Reddit today that by definition, because this here is over a 20% upside, it counts as a bull market. Like, holy hell, dude. I probably should stop arguing on Reddit. Genuinely stupid people. Yeah, it's not a bull market because it went up 30% from this local bottom. You go, but a bull market by definition is a 30% upside from a local bottom. It's like, okay. You have none of the macroeconomics to support that opinion. So this is stage 3 of a bearish condition. Speculation. I wrote it actually. Well, I'll pull it up. Why not? Why not? Okay. Now, we have unprecedented volatility with record high unemployment. That's not a bull market. This move is a response. This move up is a response to volatility as a consequential defined expected kickback. All right. Stage 3. Where did I write it? The third phase shows speculators start to enter the market, consequently raising some prices and trading volume. Okay, in the fourth phase, stock price continue to drop, but slowly, right? Reduced volatility, slow trickle to the downside as the panic selling is cooling off. Okay, so that's that. All right, how are we doing today? Hippity hoppity. All right. Okay, doing pretty good today. Yeah, but housing's overvalued, so I wouldn't buy housing. Yeah, I said that way too slowly. Okay. You want the dropped HC? Probably not. I really like that one though. Well, if you like Philly Modern Sharp, it's a good one. All right, you guys need to give me more charts to look at. So I'm not a trader, but a long-term investor. I have a good amount of cash on the sidelines. How would you go about deploying it in the current situation? Ooh. Okay. So when you say long-term investment, that means you want to hold for more than a period of a few years. However, the safest bets on essentially any chart right now is down. Oof. I guess you could do short-term gold and silver. Palladium's been overvalued, so I wouldn't do that. Rhodium too. Although rhodium investment there aren't any indices for it. Or yeah. Rhodium investing is a cool thing though, because it's all, it's physical. But I'm getting off topic. A dated long put is logical. One with minimal risk. You just want to set that strike price. Just lower where we are and say, hey, within the next 2 years, it's eventually going to hit that price. And then eventually you'll be right. But as far as long-term holding, man, the long-term holds should come 2 years from now. Like if you just want to buy and hold something, it's going to be at the bottom. I could point it out to you. So when you have a volatile downside, so first 2 months here, 10%. You have your initial kickback, which is this boy. Oh, this is the return to normal. Oh yeah, you're going to get this. This is the return to normal, right? And then we're going to get the slow trickle down. It might be like the dot-com bubble where it's just slow, sustained death. But generally, we don't go back up until we have universally aligning positive fundamentals. 2008, it was tax cuts across the board. Everybody loves tax cuts. So we could dead cat. We might go higher. You know, I don't care. But it's a risk. Do you think Bitcoin has a role to play in this? Yeah, I do. I mean, mostly because of the halvening. I think what's going to happen is Bitcoin's price is going to go up because of the halvening, and then people are going to see Bitcoin going up and the stock market going down, and people will say, "Ah, yes, this is a safe haven asset," even though it's definitely not. And people will buy into Bitcoin because they think it's safe when it's just a fundamental reason that there's an increase of valuation. So it's questionable. Oh God, what happened? I just went bullish on Bitcoin. Will I make it on a long enough time frame? Yes. Bitcoin dominance turn. Yeah, I can do that. Out of tune. Beautiful. Beautiful. All right. BTC.D. Holy moly. Yeah, it's the monthly chart, all right. Okay. Let's do the daily. Oh, so here's what I got to say about this. If Bitcoin goes sideways, well, let's start at the start. If Bitcoin goes down, altcoins go down. If Bitcoin goes up, altcoins go down. If Bitcoin goes sideways, then you get alt season. Because Bitcoin is in a compressionary condition on the daily chart, it's going to go sideways, which means altcoin dominance is going to increase, meaning Bitcoin dominance is going to trend down. Yeah, I think we're going to see increase in alts. Okay. Where's my guitar pick? Hold on. I don't need it. I'll just play my fancy chords. Yo, I need charts. Otherwise, I'm just going to play my guitar. That's how this works. Unless we're done. Are we done? Might be done. Yeah, it's getting quiet. All right, you got 2 minutes to get any final questions in. XRP BTC, sure. I'm gonna guess it's still going sideways. Yeah. Okay. This kind of chart, if there's an upward break, you bet on it. I mean, XRP is just so cyclical that when you get these long-term compressions and you see any sign of an uptrend, yeah, go ahead and bet on it. I'm going to refresh the chart template real quick because I messed it up. XRP BTC. Go. That daily chart. Yeah, no 8 p.m. readings here. 4-hour chart, no 8 p.m. readings here. It's compressionary noise. If you want to range trade it, you can. If you see a significant breakout to the upside, I'd bet on that. But right now, it's kind of a risky play. You can do it though. I'm doing it. All right, is that it, guys? That's it. All right, it's been fun. I'll talk to y'all tomorrow. Not tomorrow, Monday. Talk to y'all Monday, 2:30 p.m. MST. Okay, it's gonna be it. I'm leaving. Goodbye. Bye, everybody. Goodbye.